you're taking on with this afternoon. So let's get started. Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled "The Future of Housing in America, Government Regulations and the High Cost of Housing." Before we begin, I'd like to thank the witnesses for appearing before the subcommittee today. We look forward to your testimony. I now recognize myself for 5 minutes to give an opening statement. Last year, I joined several of my colleagues in New Orleans to examine the state of housing 10 years after Hurricane Katrina. While in New Orleans, we visited public housing sites and met with residents. My colleagues will remember meeting a woman who had lived in public housing her entire life. Like so many people across the nation, she told us her goal was to escape public housing and have her own home. This resident told the story of her son, who had achieved her dream and purchased his own home. He broke the cycle his mother aimed to shatter as well. He was able to do that because he had opportunity. He had options. He found a house to call a home. So today we ask ourselves, where do people go when they reach self-sufficiency? Is the stock of affordable market rate housing plentiful enough to support the people seeking it? The unfortunate answer is no. According to a recent study by NYU and Capital One, the renter population is growing while affordable housing options, those that consume less than 30% of household income, are shrinking. The study also found that in cities across America, the average renter can afford fewer than 25% of rental units. Imagine that daunting landscape through the eyes of a single mother looking to graduate from public housing. Today, we'll examine some of the root causes behind rising housing costs in the nation, with specific focus on the government's contribution to the price tag. Federal, state, and local rules and regulations, including Davis-Bacon wage rates and zoning laws, are proving to be barriers to the development of affordable housing. According to the New York City Independent Budget Office, the requirement to pay prevailing wages translates to a per-unit cost increase of nearly $45,000. That's an additional $2.8 billion in labor costs to meet the mayor's affordable housing goal. In manufactured housing, rules and regulations from the Department of Housing and Urban Development, the Federal Housing Administration, and the Consumer Financial Protection Bureau have stifled the availability of an affordable alternative to site-built homes. This subcommittee will continue to dedicate its time and energy examining different methods to lift people from poverty and ensure that people don't have just a place to live, but a place to have a life. This is an important conversation. In the words of one of our witnesses, Professor Michelle Dickerson, and I quote, "For the first time since possibly the Great Depression, the lack of affordable housing is being viewed as a crisis that affects Americans of all ages, races, and income groups. Government has inserted itself into the business of housing by mandating affordable housing and community reinvestment while simultaneously shifting creation of affordable housing and community reinvestment. It's time to promote the development and availability of housing for low and middle income Americans, not restricted." I want to thank our witnesses for appearing today. We look forward to your testimony. The chair now recognizes the ranking member of the subcommittee, the gentleman from Missouri, Mr. Cleaver, for 5 minutes before an opening statement.
Chairman Lukemeyer, members of the committee, good afternoon. Thank you again for giving us your time to help us focus on this important issue. When you consider the fact that there are approximately 12 million Americans who spend more than 50% of their income on housing, I don't think that it is a far-fetched notion to say that we are in the throes of a crisis. The future of housing in America, government regulations, and the high cost of housing. It's been about 8 years since the economic meltdown of 2008. And as we all know, not only did the Great Recession devastate individual household wealth, but it also eviscerated our housing market. Recovery has been slow, and in the time, housing trends have shifted with more Americans renting than purchasing new homes. And today's hearing gives us an opportunity to learn from you ideas in which we can put in place to turn this unfortunate turn of events around. According to the Joint Center for Housing Studies at Harvard University, the number of U.S. households that rent their housing rose to a 20-year high of 35.5% in 2014. And at the same time, the national rental vacancy fell as rents soar. Wages have also stagnated, leaving more Americans rent burdened. Simply put, many of our constituents are facing a housing crisis where need outweighs availability. And because of this, it is crucial that we provide robust funding for our federal housing programs. For example, recently I joined with Ranking Member Waters and 69 other members to request that our appropriations, or the appropriators, provide strong funding for Section 8 rental assistance as well as for housing programs that provide dedicated funding for the elderly and the disabled. I also urged our appropriators to fully fund the Home Investment Partnership Program and the Community Development Block Grant Program. Both programs effectively leverage private capital through federal investment to encourage the development of housing, though both have been cut in recent years. We thank you for your participation. I look forward to hearing from you in your testimony.
Today we welcome the testimony of Mr. Clyde Holland, Chairman and Chief Executive Officer, Holland Partner Group, on behalf of the National Multifamily Housing Council and the National Apartment Association. Mr. J.R. Daly, Chief Operations Officer, American Homestar Corporation, on behalf of the Manufactured Housing Institute. Ms. Vicki Bean, Commissioner, New York City, Department of Housing Preservation and Development. Mr. Granger McDonald, Chief Executive Officer, McDonald Companies, on behalf of the National Association of Home Builders, and Professor Michelle Dickerson, the University of Texas at Austin School of Law. Each of you will be recognized for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record. But before we proceed, I want to seek unanimous consent to yield time to the gentleman from Texas, Mr. Williams, for the purpose of introducing not one, but two of today's witnesses. So without objection, the gentleman is recognized.
Thank you, Mr. Chairman. It is a great honor to introduce two great Texans. Of course, everybody in Texas is great, but we're proud of our state. First of all, it's an honor and privilege to introduce this morning Granger McDonald, who is not only a fellow Texan, but has been a dear friend of mine for many years. Granger is a second-generation builder and developer from Kerrville, Texas, one of the most beautiful cities in America, with more than 40 years of experience in the home building industry. He sits on the board of the National Association of Home Builders as first vice president and is chairman and CEO of the McDonald Companies, as we have heard. As you will hear from him this afternoon, housing is one of the most regulated industries in the nation. Mr. McDonald is uniquely qualified to speak about the regulatory barriers to affordable housing, and we look forward to hearing his testimony today. And Granger, welcome up here. Good to see you. Next, another great honor to introduce Michelle Dickerson. I'm happy to introduce her this afternoon, another fellow Texan and a professor of law who teaches at one of the finest universities in the country, one that I just happen to represent in the United States Congress. Ms. Dickerson is a nationally recognized bankruptcy law scholar in addition to being a professor at the University of Texas Law School. In addition to her teaching responsibilities, Professor Dickerson has published numerous books and numerous articles that should be relevant to our hearing today. So I look forward to her testimony and that of Granger's, and Mr. Chairman, I yield back.
Thank the gentleman. Just a couple quick notes. Excuse me, I've got a little allergy problem today, so forgive my voice here. You got some lighting systems in front of you. Green means go, yellow means you got 1 minute left to go, and then when it hits red, kind of wrap it up. Also, we do have votes here shortly, and as I talked to all of you a while ago, we're going to try and get as far down the road as we can with testimony before we stop. We will take the time out then at that point, do our duty of going to vote on the different issues that were before us today, and then come back and complete the hearing at that point. So let's see how far we can get. Mr. Holland, we're going to recognize you for the first discussion in 5 minutes. Proceed. You got in front of you, hit a little button there to get you started.
Thank you, Chairman Lukemeyer, Ranking Member Cleaver, and the members of the subcommittee. It's my privilege to appear before you today on behalf of the National Multifamily Housing Council and the National Apartment Association to discuss the challenges of meeting the increasing demands for multifamily homes for millions of working Americans. I'm the Chairman and Chief Executive Officer of the Holland Partner Group, based in Vancouver, Washington. We're a fully integrated real estate investment firm in the Western U.S. with experience developing approximately $7.5 billion in assets representing 30,000 apartment homes. The lack of affordable workforce housing is placing increased financial pressure on middle-income Americans. According to a 2013 report by Harvard's Joint Center for Housing Studies, more than 1 in 4 renter households, or approximately 11.2 million individuals, paid more than half of their income for rental housing. Without your leadership and effective policy enactment, meeting the affordability challenge will become increasingly difficult. Changing demographics and housing preferences drive more people toward renting. Almost 75 million young adults are entering the housing market as renters. At the same time, baby boomers and empty nesters are trading single-family houses for rental apartments. This combination of factors is forecast to lead to 4 million new renter households over the next decade. There are several reasons why Americans are facing high rents and finding too few affordable options. First, while the cost to develop and operate rental housing increases annually, the median renter household income is virtually unchanged since 1981. In many markets, even if developers agreed to take no profit, the cost to build still exceeds what people can afford to pay. Second, there is an enormous mismatch between the supply and demand for apartments. As my first slide illustrates, actually, if you could go back one slide, my first slide illustrates the NMHC and the NAA estimate that between 300,000 and 400,000 apartments must be constructed annually to simply keep pace with demand. Yet on average, just 208,000 apartments were delivered annually in the 4-year period from 2011 to 2015. While completions of 310,000 units in 2015 was an improvement, the stock of available entitled land is diminishing. Future development will be constrained, making it more difficult to fulfill the housing need. Lastly, development of new apartment homes is exceptionally difficult in many markets, simply impossible. We've been developing and rehabilitating apartments for over 30 years, and the current environment is by far the most challenging. There are many hurdles and regulations that can impede the process. Community resistance to renters, or NIMBYism, is frequent but rarely based on legitimate concerns. Before a project can break ground, the entitlement process can take 2 to 10 years and require an upfront investment of $1 million or more. Even in communities that want and desperately need new multifamily development, the numerous hurdles that must be overcome include entitlement expenditures, zoning rules, environmental site assessments, impact fees, mandates like inclusionary zoning or rent control, and labor expenses and building code requirements. One thing I'll point out on the slide that's before you is in 2007, when the financial meltdown happened, there were many individuals and firms involved with land entitlement. They lost everything. And today, the funding for new entitlements is nearly non-existent. And so the raw material necessary, particularly in high barrier to entry markets, of zoned land that can be utilized is falling at a rapid clip. All of the costs add up. Point Loma Nazarene University studied the San Diego housing market and found that regulations increase the cost of housing by a staggering 40%. The White House Council of Economic Advisors Chairman Jason Furman recently noted that multifamily housing units are the form of housing supply that is most often targeted of regulation. We could not agree more. The bottom line is that workforce housing development requires a partnership between the government and the private sector. Local governments can do this by bringing down barriers to development and incentivizing for-profit entities to build apartments at a price that is affordable for the community. When both the public and private sectors bring all their tools and assets to play, the greater the likelihood of finding solutions to our housing challenges. Specific proposals to accomplish these objectives are included in our written testimony. Americans work hard and deserve quality housing at a price they can afford. As a nation, we are falling far short of our goal. What is needed is a bold, fresh vision that sets aside historic approaches. We recommend a task force challenged with developing effective solutions to today's housing challenges. Thank you.
Thank the gentleman for his testimony. Next, we go to Mr. Daly. Recognized for 5 minutes. You may begin.
Good afternoon. Good afternoon, Chairman Luckmeyer and Ranking Member Cleaver, members of the subcommittee. My name is J.R. Daly. I'm the Chief Operating Officer of American Homestar Corporation, who designs and produces manufactured housing. Thank you for the invitation to serve as a witness at this important hearing about regulatory barriers to affordable housing. I'm pleased to testify on behalf of the Manufactured Housing Institute, of which I serve on the Board of Directors, and the Media Pest Chair of the Manufacturers Division and the Chairman of the National Modular Housing Council Division. 22 million Americans call manufactured housing their home. It is simply the most affordable home ownership option for families who live in non-metropolitan and rural areas. Median income for manufactured homeowners is just over $26,000 each year. Last year, the industry produced over 70,000 homes, roughly 9% of the new single-family home starts. I am pleased to testify on the regulatory barriers facing manufactured housing, a critical source of available housing, which in so many parts is in short supply. While much progress has been made in achieving economies of scale and delivering high-quality, affordable homes under a robust federal housing code, there are three strong headwinds that keep the industry from fully meeting the critical need for affordable housing in this country. First, we have a housing financing system that does not adequately meet the needs of borrowers looking to finance and purchase and manufacture housing. CFPB regulations pertaining to the definition of loan originators, as well as HOPA provisions governing small balance loans, have prompted a decline in smaller loans, shutting out many customers. We applaud this committee and the House for passing H.R. 650 this past year, preserving access to the Manufactured Housing Act. In addition, FHA's Title I program for chattel lending simply does not work, as evidenced by the facts that there are only 80 certified appraisers in the entire country, and the fact there was only $24 million of endorsements in 2014. Finally, despite the 2008 Housing Economic Recovery Act's duty to serve requirements for manufactured housing, Freddie and Fannie have largely stayed away from participating in the chattel home-only market, which represents 70% of the total homes that are sold. While the recent proposed duty to serve rule, we see the opportunity for development of a secondary mark for chattel loans. The second headwind is that of manufactured housing production that is regulated by the HUD code, a comprehensive set of guidelines that touches virtually everything in the assembly and site process. While the industry works well with HUD, there are several areas where improvements are needed. Greater attention to economic impact concerns as HUD financial its regulations, exercising its preemption authority with states and localities as we are preempted out of zoning by some communities, ensuring greater coordination among federal agencies that impact housing, such as the Department of Energy's energy efficient standards. We support legislation H.R. 3135 that would ensure that HUD remains as the prime regulator in the partnership with the DOE. Finally, the third strong headwind, the 1974 legislation that brought the industry into the modern era, the Manufactured Housing and Construction Safety Standards Act. It is antiquated. For example, the Act puts the industry under federal lemon laws, even though we're not an automobile business and have otherwise robust quality assurance and dispute resolution tools under the HUD code. And the Act requires that homes being built on a steel chassis, which stifles design innovation. We believe, in conclusion, through partnership with this committee and our work with HUD and other agencies, we will make progress in these critical areas and will continue to expand the supply of affordable housing. Thank you for the opportunity to testify.
Thank you, Mr. Dill. You came in under a minute under the bell there. Well done. Ms. Bean, you may proceed. Recognized for 5 minutes.
Thank you, Chairman Lukemeyer, Ranking Member Cleaver, and members of the subcommittee. Thank you for the opportunity to testify today. I am Vicki Bean, the Commissioner of the New York City Department of Housing Preservation and Development. HPD is responsible for carrying out Mayor Bill de Blasio's initiative to build 80,000 new affordable homes and preserve the quality and affordability of another 120,000 homes over the next 10 years. Let me highlight a couple of key initiatives we've undertaken in the city to help address the critical need for affordable housing. And I will then explain why that need, despite the city's Herculean efforts, requires both greater federal commitment to fund the construction and preservation of affordable housing and more flexibility in federal programs. First, the city has doubled the capital funding that the city is providing to create and preserve affordable housing to $8.2 billion over 10 years. Funding from the federal government is absolutely crucial to address the affordable housing crisis, but while we are asking Washington for support, we are committing a huge amount of our own resources to build new and preserve existing affordable housing. Second, our City Council is voting as we speak on two very significant changes to our local regulations to provide new tools to achieve affordable housing for a broad range of families and to remove inefficient regulations that raise the cost of housing. The first change will implement mandatory inclusionary housing. Our program will broaden the income levels that we serve so that we can provide homes to families who are at poverty level, far below the 50 to 60% AMI of tax credit properties, as well as all the way up to moderate income workers earning 80% of AMI, for example, who increasingly are being priced out of the city. We've also made major updates to our 1961 zoning text to encourage more senior affordable housing and remove unnecessary parking requirements and other regulatory barriers to the production of affordable housing. Much has been made of the burdens that regulation imposes on construction, and our update to the zoning text removed many inefficient regulations. But many of the regulations that folks claim are unnecessary or unduly burdensome are critical to making our neighborhoods safe and to ensuring that growth doesn't outpace the supply of essential infrastructure and services. Sadly, we saw this illustrated in the East Village last year, where construction and gas connections that were not in compliance with the building code leveled multiple buildings, killed 2 people, and displaced dozens from their homes. Let me turn to a few areas where I believe Congress could be enormously helpful in addressing the housing needs of people all across the country. First, the low-income housing tax credit could be even more successful if the program were amended to allow income averaging. The developer could offer units affordable to tenants earning between 40% and 80% of AMI. The higher income units could then cross-subsidize the lower income units, and communities would be able to serve lower income households without any additional cost to taxpayers or to the developer, and would be able to meet the needs of a far broader group of families. Next, day in and day out, we hear from local elected officials and community organizations about the dire need for senior housing. Historically, the HUD Section 202 program spurred the production of affordable senior housing, but it has been completely defunded since 2011. We desperately need Congress to restore funding for the 202 program. In New York City alone, we have 200,000 seniors on wait lists for affordable housing in the city. Without 202 funding, we are unable to meet those needs. Finally, there are many critical HUD programs that we use locally, including HOME, Public Housing Capital and Operating Funds, RAD, but I must stress the paramount importance of the Section 8 voucher program. I know that Congress is very concerned about the growth of this program as a percentage of the overall HUD budget, but I can't emphasize enough how critical it is. We use those vouchers to allow us to rehab dilapidated housing where residents could not afford the increased rent that would otherwise be necessary to support the rehab. We use vouchers to help prevent and to end homelessness. We project-base Section 8 vouchers to develop new affordable housing, especially for seniors. I'm hopeful that our sustained local commitment to preserve our existing affordable housing and build much-needed new affordable housing will stabilize our neighborhoods. But we can't do it alone. Our local efforts must be paired with a renewed federal commitment to fund affordable housing and support local governments' efforts to provide better homes and stronger neighborhoods for our low-income families. I am grateful for the subcommittee's attention to affordable housing and for calling today's hearing, and I'm happy to answer any of your questions.
Thank you, Ms. Bean. Mr. McDonald, you're recognized for 5 minutes.
Chairman Luke Meyer, Ranking Member Cleaver, and members of the subcommittee, thank you for the opportunity to testify today. My name is Granger McDonald. I'm the Chief Executive Officer of the McDonald Companies and a home builder and multifamily developer from Kerrville, Texas. I also serve as NAHB's first Vice Chairman. Mr. Chairman, we appreciate the opportunity to testify as the home building business is the most regulated industry in America. Regulatory burdens impose costs on the development of land and construction of single-family and multifamily homes. These added costs are passed along to homeowners and renters through higher prices and rents. On average, 25% of the price of a single-family home is attributed to regulation. Regulation ends up pushing up the price of housing beyond the means of many middle-class working families. On a national basis, a $1,000 increase in home prices leads to pricing out slightly more than 206,000 individuals from home purchase. Over 110,000 renter households will become burdened by rising rents if the cost of producing rental housing units increases by $1,000. The construction trade is constantly the focus of regulations from OSHA, EPA, DOA, FEMA, and other agencies. Specifically, regulation on energy codes, EPA's Waters of the United States, OSHA's crystalline silica, Department of Labor's Persuader Rule, and joint employer standards, and the ADA compliance are only a few of the myriad of regulatory issues that my industry faces on a daily basis. All of these regulation factors in the cost of housing, as comes to cost increases and access to capital remains tight, home buyers and renters will have fewer safe, decent, affordable housing options. While regulatory reform will help us lower the development costs to reach lower-income households, it is financially infeasible to construct new, unsubsidized, affordable housing units without federal assistance. It is important to remember that the regulatory reforms are not a substitute for programs like the Low-Income Housing Tax Credit and Housing Choice Vouchers. Let me expand on a number of barriers that directly affect housing affordability. NAHB has serious concerns regarding the decreased housing affordability that will result along the nation's rivers and coast once HUD begins to implement the administration's flood executive order. This order expands the floodplain management requirements far beyond the long-established 100-year floodplain. HUD has indicated it will apply the order to all federal projects such as home, CDBG, and federally insured multifamily projects such as FHA-backed loans. The major concern is that HUD has not mapped the geographical limits of the expanded floodplain or analyzed the cost and benefits of implementing new standards. Additionally, the home building industry is experiencing a major labor shortage, with 41% of the builders identifying this as their top concern. I have seen how labor shortages have delayed construction projects and made them more costly. Projects that should have taken 14 months and $100,000 per unit to construct now take 18 months and $115,000 per unit to construct. It is impossible to build rental units without reluctantly passing on the increased cost to the consumer. To address this labor shortage in our industry, we should work to encourage careers in construction, and the trades in the residential building and remodeling are good, family-supporting jobs. Carpenters, for example, earn an average of $45,000 per year, while electricians and plumbers earn an average of $54,000 a year. Davis-Bacon can substantially increase the cost of constructing affordable housing. Smaller builders and subcontractors are ill-equipped to deal with the compliance burdens and the reporting mandates that are required on a weekly basis. These burdens are disproportionately affecting small businesses who cannot afford to hire the compliance staff or consultants. This negatively impacts the goals of the government's housing program by unnecessarily creating additional layers of bureaucracy and cost. Lastly, the ability of the home building industry to address affordable housing needs and contribute significantly to the nation's economic growth is dependent upon a housing finance system that provides adequate, reliable credit. At present, home buyers and builders continue to confront challenging credit conditions, weighed down on an overzealous regulatory response to the Great Recession. Lingering doubts and uncertainty of the market participants has resulted in undue restrictions on availability of mortgage credit to many credit-worthy homeowners. It is essential that all levels of government work together to remove the unnecessary red tape that delays and prevents development. I would like to thank the subcommittee for the opportunity to testify today. We look forward to working with you to achieve the necessary reforms and expand the availability of affordable housing.
Thank you, Mr. McDonald, for your testimony. Professor Dickerson, you're recognized for 5 minutes.
Good afternoon, Chairman Luetkemeyer, Ranking Member Cleaver, and members of the subcommittee. My name is Michelle Dickerson, and I teach both law students and freshmen at the University of Texas at Austin. Thank you for giving me the opportunity to participate in this hearing on the housing unaffordability crisis and how it is affecting middle-class, middle-income families throughout our country. You've asked me to specifically address how overall housing trends and recent changes in the U.S. housing market should inform housing policies. Middle-class and working-class Americans who work hard, play by the rules, and are not leading extravagant lifestyles are struggling to find affordable housing to buy or to rent, and this has now become a national crisis. There are two things I will stress about the current housing unaffordability crisis. The first is that the crisis involves more than just sluggish home sales. It's certainly true that soaring single-family home prices have now made it harder for middle-income Americans to become homeowners. The 2015 overall homeownership rate of 63.4% was the lowest rate in this country in almost 50 years. But the crisis is having a devastating effect on people who are and likely will always be renters. Since the recession, the number of renters in the U.S. increased by double digits, and renter households are now the majority in 9 of the 11 largest U.S. metropolitan areas. Unfortunately, affordable rental units are not being built at a rate that is keeping pace with the heightened demand for these units. The housing affordability crisis is not limited to the home buying market, so solutions to the crisis should not be narrowly focused on ways to make it easier for people to buy single-family homes. We saw during the recent housing crash and recession that it is not enough to just relax regulations and lending standards to qualify borrowers for a mortgage loan. Homeowners won't remain in their homes if they don't have the financial means to do so. The second point I will make is that the housing unaffordability crisis involves more than just poor people. Although certainly housing unaffordability is a problem for the poor, even full-time workers are now struggling to find affordable housing. The harm to the middle class is striking. Approximately 75% of renters who earn between $30,000 and $45,000 each year, and almost 50% of rental households who earn between $45,000 and $75,000 each year pay more than 30% of their income on housing. That's the core of our middle class, and they are paying a disproportionate amount of their annual income on housing. Young adults in particular are struggling. Our millennials between the ages of 25 and 34, the ones who should be first renting and then buying homes, are unable to do so. Their homeownership rates are the lowest they have been in more than 20 years. Young workers who have good-paying jobs are finding it hard to buy homes or even to pay rent. Many have returned home to live with their parents because they can't afford to both repay their student loans and also to pay rent or to save enough to buy a home. Housing policies should continue to support developers who want to build and Americans who have the means to purchase large single-family homes. However, if we as a nation are serious about solving the housing unaffordability problem, everything needs to be on the table and up for reexamination. All current land use laws and policies should be reexamined to ensure that the policies reflect the new economic realities middle-class families are facing. Cities and states need to rethink their zoning laws and policies and consider whether things like inclusionary zoning can help ease the affordable housing crisis. As a nation, we must reject the antiquated view that large single-family homes are preferable to all other forms of housing. And finally, we need to consider whether one of the largest tax expenditures, the mortgage interest deduction, which disproportionately favors high-income taxpayers, needs to be reviewed or revised, because there are so many middle-income households that are struggling to even find an affordable place to rent. Mr. Chair, I commend you for convening this hearing, and thank you, and I will be happy to answer any questions you might have.
We thank the panel for the testimony, and I'll now recognize myself for 5 minutes to begin the questioning. Hopefully we can get through a couple of groups before we have to go call for the votes. Mr. Holland, you had some interesting testimony, and you represent the multifamily housing group. What do you see as the biggest barrier, the most burdensome rule, the most burdensome regulation to being able to build affordable housing, multifamily housing?
Well, Mr. Chairman, thank you very much. That's a very good question. What I can say is the biggest concern for providing housing, it really differs. In the middle of America, you have a very different environment, if you will, than you have at the coasts. In your high population areas, the biggest impact to providing affordable housing is the lack of zoned land or land that's entitled for high-density housing. The nature of the housing demand has shifted. You have millennials that are about 75 million. They want to live downtown. They want to walk to work. They don't want to be involved in commuting. So the competition for urban infill housing is extreme in your rising Gen Y workforce markets. With respect to the open areas and areas essentially in the middle of America, you have a different set of elements, and Mr. Granger and Mr. McDonald talked about the regulation and aspects of that. And one of our studies showed 40% of the cost of a rental apartment has to do with regulation. And so within the confines, if you will, of where we're at, that lack of entitled zoning and land and the increasing burdens of costs associated with that are really the center of that.
Okay, you said 40% of the cost of a renter, of producing a rental unit is due to rules and regulations?
Yes, sir.
Holy smokes, okay. Professor Dickerson, quick question for you. You made a comment a minute ago about percentage income people are able to pay. Would you give me a figure of what you think would be adequate for somebody to be able to pay a certain percentage of their income for rent and or a house payment?
Historically, 20 to 25% was the number. The problem now is that 30% is now seen as the floor, and it goes as high as 50%.
Okay, and I assume, you know, sometimes people can afford 30% more than they can afford 50% because they've got a higher income. So 30% of a high income is a lot less than 50% of a small income. So it depends on how much income you make, I would assume, depending on what percentage you can pay. Is that right?
And I'm sorry, I misunderstood your question. I thought you were referring just to the middle class.
Okay, well, that's a good place to start. So I appreciate that. Very good. Mr. McDonald, you had some interesting comments with regards to the different problems that you see with regards to building homes and providing adequate housing for folks. And you talked about floodplain problems. Can you explain that just a little bit?
Yes, sir. The new rule, the executive order that's coming down that HUD is looking at changes the 100-year floodplain to a new undefined amount of floodplain. And the problem that we have with it, and we're not saying that we're opposed to the executive order at this point, but we're opposed till it's better defined. And HUD itself has done none of the modeling to determine what that floodplain would be. So we don't know for every foot you go up, how many feet you go out laterally. And so until there's modeling done to prove what that is, we can't even determine the cost or the real effect of it. And we would appreciate HUD suspending any action on the executive order until they actually knew what the full extent of it was and the unintended consequences.
Ms. Bean, on the 80,000 new affordable housing units that the mayor is proposing, are those for seniors, disabled, other folks, mixed?
They're
Is it
available.
mixed use of everybody, or is it just subsidized housing? Or can you explain what's in the 80,000?
So the 80,000 is subsidized housing, and it's available for a wide variety of people at a wide variety of incomes. We do provide housing that is only for seniors. So for example, in the last 2 years, we've provided about 3,000 new units just for seniors, but seniors can enter the lottery for any of our new units
Okay,
as
but
well.
these are all subsidized units.
Yes.
They're not, it's not a mixed use structure where you have individual private pay and or a commercial use within the building and then subsidized. This is only for subsidized folks.
This is only for the subsidized units. Often they are in mixed income buildings and serve a range of incomes.
Okay, thank you. My time has expired with that. I'll go to the gentleman from Missouri, the ranking member of the committee, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. I want to focus on low-income housing tax credits. And since it's the largest driver of private sector investment, what can we do? Only about 10% of those tax credits are used. What can we do to attract a greater number of corporations, individuals who are interested in some kind of a housing development? Ms. Bean.
I'm happy to jump in there. I'm happy to say that we use every low-income housing tax credit available to us in the city, and the way that we do that is by using those tax credits to leverage other resources, both private resources and other subsidies from the city. We also work very hard to provide greater flexibility. As you know, one of the critical issues with the tax credit program is that because it targets 50% and 60% AMI, then you're not serving many of the poorest families, and you're not serving a lot of the working and middle class that Professor Dickerson mentioned. By allowing averaging, you provide a lot more flexibility, and also you give the developers flexibility that makes the risk of the property less intense, right? If they have a family that earns income that's now at 65%, that can be averaged out so that they don't have to evict that family in order to stay compliant with the low-income housing tax credit rules. So greater flexibility is key.
Well, is the dollar for dollar sufficient as a magnet?
Well, is it sufficient? It's necessary. There's probably other things that are required as well. A great deal of flexibility about both the zoning entitlements. All kinds of flexibility is required in order to to attract people to to those developments.
Mr. McDonald?
Well, in the state of Texas, we're about 5-to-1 oversubscribed for the credits. So there's, in the allocation process, there's 5 projects for every one that gets funded. So we're getting it. We could use more credits. Right now, it's based at $2 per capita for every citizen in the state.
I would expect that from Texas.
Yes. It's hard in Texas right now to get a deal, obviously, because there's so many people fighting for them. And part of the scoring process in the qualified allocation process is deeper skewing, and you get more points for deeper skewing. For example, in Texas, if you're going to be successful in getting a tax credit project now, you've got to go to 30 or 40% of median income for a percentage of your tenants, or you're not going to score high enough to win the deal.
Mm-hmm. So do either of you, Ms. Bean or Mr. McDonald, believe that we are already operating at the optimum level in order to attract private investment?
I would love to see more funds put into tax credits. I'm sure that would be a hard fight. It's hard every time we try to get anything in the tax credit program done for increasing the amount of credits, but they are one of the finest investments for private sector, governmental sector partnership that there's ever been designed, because you have a government hand in helping facilitate getting something done that's run in the private sector. So it's the best of both worlds.
Ms. Bean?
I would agree with that. Not only are our tax credits vastly oversubscribed, but we allocate our tax credit properties through a lottery. We are now getting 1,000 applications for every single unit of affordable housing that we're putting on that lottery. So the need is vast, and we need even more tax credit money. It leverages a huge amount of private investment, so it's a well worth the expenditure.
Mr. Holland?
Yes, sir. One of the things that's overlooked many times is the 4% tax credits with 80-20 bonds. If you look at the success of the 80-20 bond program, it created the single largest number of units, both market rate and affordable housing, that's been available. However, since the meltdown and with Fannie and Freddie being put into conservatorship, the cost of credit enhancement of those bonds for many of the last 5 or 6 years has not been available, and the cost of rollover credits is now up 300%. And so if with effective credit enhancement for the 80/20 bond program, it will unlock the use of 4% tax credits, which have largely been wasted. They're not being utilized. And so with the oversubscription of the 9% credits, if we had effective credit enhancement for the low floater bond program, we'd be there. We also support income averaging because it is a much more effective outcome.
Thank you.
Gentleman's time has expired. Votes have been called, and I think we're going to try and get one more in, and then we'll move to recess. And with that, we go to the gentleman from Georgia, Mr. Westmoreland, who is the vice chair of the committee. Recognized for 5 minutes.
Thank you all, and I'm a recovering builder, so I've got some interest in this. Mr. McDonald, on the flood insurance, this committee is very concerned about flood insurance and the cost of it. Is it true that you still, even though just a corner of your property would be in a floodplain and the elevation of your house be 6 feet above that, do you still have to have flood insurance with a FHA loan?
That's correct, sir.
We are going to hopefully try to get that to where there's some type of elevation that you would no longer have to have it. But I'm assuming that the reason they're requiring them to have flood insurance is knowing they would never flood and help offset somebody else's. The other question I have for you was on OSHA. Since OSHA, if I understand it correctly, has gone to a policy much like the IRS, where somebody turns in a safety violation, they get a certain amount of that fine. Have you seen an increase in OSHA in the last couple of years?
We have. We've seen a large increase in OSHA inspections in all forms of the construction industry, and I wouldn't want to speculate, but as to what caused it, but I certainly wouldn't tell you were wrong.
I would think that was I think that probably is a big cause of it. Mr. Holland, did you do a project in Griffin, Georgia?
No, sir.
Okay. The pre-owned homes, the sales was down about 8%.
Yes,
Have
sir.
you seen a rise in the rental? I know you talked about how many units were going to be short. Have you seen an increase in your rental occupancy that would kind of counterbalance what the pre-owned homes have been?
Yeah, what we've seen, particularly in our urban environments, is that the demand for housing is far outstripping our ability to build supply, and that the cost, it's really, there are three parts of the triangle. One part of the triangle is the cost of the actual housing. The second part, which families have to deal with, is the cost of transportation of where the housing's built compared to where their job is. And the third part of that deal is really how you handle the infrastructure costs and who gets essentially tagged with those infrastructure costs. And so, yes, we've seen a significant increase in the demand for rental housing, which is pushing prices up very significantly.
Is the impact cost basically sewer, water, police protection, or just they kind of make up some stuff?
Well, how did you say it? I wouldn't want to dissuade that aspect of things, but it's been noted that many cities who are suffering financial burdens because of the meltdown have looked to new development and significantly increased their impact fees to try and make up for lack of funding in other areas, which has pushed up the cost of the new housing. And because of the Basel III regulations and the banking regulations, an appraisal has to justify those rents, so the entire market has to bear that increase before you can qualify for your financing to move forward.
Thank you. Ms. Bean, you mentioned 80,000 new affordable homes. Are those single-family homes or?
Some are single-family, most are multifamily. New
Okay.
York is a multifamily.
And then another 120,000. You talk about HPD is leading the mayor's charge in partnership with our sister agencies, developers, tenants, community organizers, elected officials, and financial institutions. Mm-hmm. You don't have time to go through and tell me what each one of those do, but being from the rural area of the South, we don't see much of this. But what part would the elected officials have in this? Would it be zoning, waiving fees, or what would it be?
The elected officials in New York, if there is a rezoning required, which New York is mostly an as-of-right town. We don't do rezonings for every development. But if there is a rezoning required, the elected officials will weigh in as to what that rezoning should look like. They'll weigh in with specific concerns. You need a school to offset the people who are coming into this building, those kinds of things. So they'll express the concerns about, is the infrastructure there to support the development?
So does this organization have to pay the impact fees as well?
We don't have impact fees in New York City.
Wow. Well, I'm sorry I'm out of time, but thank y'all.
Gentlemen's time's expired. We're going to try and squeeze in one more right quick so we can, not too many people have voted yet, so I think we've got enough time. The gentlelady from New York, Ms. Velasquez, is recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Bean, welcome to the committee. In your experience with housing development, especially with high-cost cities like New York, is it possible to build affordable housing without federal rental subsidies like project-based rental assistance or federal construction subsidies like the low-income housing tax credit? Would the mayor be able to fulfill his promise of building all these units of housing without a federal involvement?
No. The federal contribution is absolutely critical. It's critical in two ways. One is that to reach the very lowest income families, the families who are at poverty level making 30% of AMI, we need a form of rental assistance. The rent that those families can pay won't even keep the lights on, truthfully. So we have to have a form of rental assistance, and that's critical from the federal government. The other way, I mean, we do sometimes get cross-subsidies from the very high-value neighborhoods, but the other place that federal dollars are so critical is in the poorest neighborhoods where housing is not only providing affordable housing, but it's revitalizing the neighborhood, it's stabilizing it, it's providing jobs. And in those poorest neighborhoods, federal dollars are absolutely essential.
Thank you. Mr. Holland, in your testimony, you stated that Congress should play a key role in addressing housing affordability. I agree with you. Can you discuss the importance of Congress increasing funding for affordable housing programs like the Section 8 program?
Yes, absolutely. From the National Multi-Housing Council and the National Apartment Association standpoint, we support full funding for these programs from that standpoint. And looking at, again, you have a 9% tax credit program, which has been very successful. But on the tax-exempt bond side, the 4% tax credits have largely gone unused because of the lack of credit enhancement given Fannie and Freddie's situation. And so effective separation of the rules, if you will, that are being put in place or being put in place because of issues in the single-family mortgage lending areas. The multifamily did not contribute to the financial meltdown. In fact, the losses at Fannie and Freddie from the apartment credit enhancements or the apartment lending were less than 1% of their portfolio. So almost nothing. But yet the cost to credit enhance the 80/20 bond program under the current conservatorship are up 300%, which has limited our ability to use that tax credit program effectively.
Sure. Thank you. Mr. McDonald, almost 2 million households did not form during the recession. As the economy improves and hiring returns to normal, how will this pent-up demand affordability?
Well, the problem is the pent-up demand hasn't been met because of many reasons. A lot of folks have wanted to either move up to a nicer home, buy their own home, or even having their own apartment, and they've just been unable to for many reasons. The new mortgage requirements that are being required now are so stringent that the credit scores have to be so high to qualify for a mortgage that it's very hard for the first-time home buyer and the move-up home buyer. They can't get to the next level. So consequently, they're not moving up. And then that has created a backlog so that when people can't get the move-up home buyer, then they don't go to the next level or the next level, and you end up with people who are fairly stagnant in place, whether they want to be or not. And then we've all got people in the renter market. There's a lot of us still have our grown children living in the basement because they can't figure out how to, get their own place, and that's not something they want or we want.
Thank you. I yield back.
Ladies and gentlemen, yields back. With that, we're going to recess. They tell me it'll be somewhere around 30, 35 minutes, so we appreciate everybody's patience. Okay, we'll gavel ourselves back into session here. I know we have a number of members that are here and that are on the way. And so we'll begin our questioning again. Thank you, panel, for the indulgence. And with that, we'll recognize a gentleman from Texas, distinguished gentleman, Mr. Williams, who was also an introductor a while ago, however they say that. Mr. Williams, recognized for 5 minutes. How's that?
Introducer.
Introducer, there you go.
Thank you, Mr. Chairman. And Mr. McDonald, thanks again for being here. Appreciate it. In your testimony, you say that 25% of the cost of a new single-family home is attributable to government regulation. Why is that so important or noteworthy?
Well, that cost has to be passed on to the consumer as a result of it directly affects the affordability of the housing. And nationally, as I said earlier, $1,000 increases the price of 206,000 households. $1,000 increases the burden to 110,000 renters. And in Texas, the most significant priced out effect, more than 18,000 households are pushed out of the market with a $1,000 increase.
And I got a couple of questions here, and we'll just go through them real quick. Do you believe that certain building construction regulation at the local level is required?
Yes, sir.
On page 7 of your written testimony, you state that the collective force of the actions taken by these agencies, i.e. CFPB, FHFA, regulators implementing Dodd-Frank, has also resulted in an undue restriction on the availability of mortgage credit to many credit-worthy borrowers. That's true, isn't it?
Yes, sir.
Based on your written testimony, does the National Association of Home Builders believe that the Dodd-Frank Act was a mistake?
Yes, sir. There's parts of it that the problem is we don't even have all the parts of it written yet.
But it'd be good if we could let competition work. That would be the best thing, wouldn't it? Let the consumers decide.
Fair market.
Mr. Daly, another great Texan, I might add, right?
Thank you for the recognition.
There you go. What makes manufactured housing an attractive option for affordable home ownership for consumers?
Well, the basic availability of manufactured housing is that on a cost per foot, it's about half the cost of site-built housing. It's built in a controlled environment. It's primarily delivered to rural markets where production builders do not operate because they don't have scale.
It's a good option for consumers. Describe today's manufactured housing. How does it compare to site-built housing or traditional apartments in terms of quality and value?
Well, the traditional manufactured housing is built to the HUD code. It's a preemptive code in the country that's been in place since 1974. And it is primarily a performance code that works across the country. Modular houses are built basically to the same code of site-built homes.
You said that the CFPB regulations are harmful to consumers, as a lot of us believe. What evidence do you have of this harm?
Well, I think the primary piece of evidence that we have is that when we look at the HUMA data, sales of homes less than $75,000, 2014 to 13, are down double-digit, while other portions of the market are doing very well. So what it basically says is those people who are trying to buy, who are the first tranche of buyers, really struggle to meet all the regulations.
In other words, another case of those people wanting to help people, they end up hurting those people. The House last year passed a bill that I believe will not only help the manufactured housing industry, but also consumers. How will the changes in H.R. 650 help consumers?
Well, I think that if the bill ultimately passes, I think there are two components that will be very helpful. The first is the trigger rate being raised will allow more lenders to participate in the market, because right now there's very few HOPA loans that are being written simply because the lenders really don't want to touch them. And then the second is the loan origination, where a lot of our buyers are new buyers or older people who have not purchased homes in a very long period of time. And
I'm sorry.
And by allowing our salespeople who can operate under the Dodd-Frank regulations be more helpful to these people, I think it can help them to learn more about buying homes and the home buying process.
Finally, if H.R. 560 becomes law, will consumers lose protections, and will they be vulnerable to predatory lending, you think?
No, I don't believe any of those things will happen. I mean, basically, what we're asking for is some slight modifications to the current law that we believe will open the market, especially to that first tranche of buyers.
Thank you, and I might add, too, Mr. Holland's also a Texan. You went to school in Texas, didn't you?
I was born just outside of San Antonio.
There you go.
I was born just outside of San Antonio.
Good. Mr. Chairman, I yield my time back.
Gentleman yields back. With that, we go to the gentleman from Pennsylvania, Mr. Rothfuss, is recognized for 5 minutes.
Thank you, Mr. Chairman, and again, my thanking for the panel for bearing with our break for the votes. I want to touch base, Mr. Holland, go back to what you were talking about earlier in response to some of the questions about the regulation, and I think you said that 40% of the cost of multifamily is attributable to rules and regulations. Do you recall that?
Yes, sir.
Yeah, we're here looking at things from a federal perspective. I'm wondering if you can identify perhaps a federal regulation that's responsible for driving up cost, or alternatively, what would be the single greatest federal barrier to development?
The greatest.
Either a federal regulations. Again, I'm trying to look at things that we can be addressing from a federal perspective. A lot of the, you mentioned zoning as an issue for I think the coastal cities. That's pretty much a local.
If you look at effective housing, there's 3 parts of the triangle. One part is actually the cost of the building of the housing unit. The second aspect is how far that housing unit is from someone's job and their activities. So that's transit. The third portion of that is infrastructure. And so we have to solve all 3 aspects in order to build, because the local jurisdictions add the infrastructure costs in forms of impacts to our requirements. So we have to get active zoning, then we have to pay for the infrastructure, and then we have to look at what the cost of transportation is for our consumer. And so one of the things we would love to have an opportunity to do is to have a task force to look at all 3, because the cost of building, for instance, another freeway to the next subdivision on the edge of town is dramatically more than the cost to increase the density, if you will, to build a high-rise in an urban environment where people can walk to work, or around a light rail or transit node where they can use public transportation. And so we're looking for an effective voice, if you will, so that we can look at the whole part of the housing criteria. In the federal question, one of the things that I cited earlier was the lack of credit enhancement for the tax-exempt bond program and the tripling of that cost with Freddie and Fannie and conservatorship. The number of apartments that were built after the 80-20 bond program was launched in the early 80s, which was a very difficult time, took starts from 200,000 units to 600,000 units over 3 years. That's the kind of solution-based outcome that we feel like a task force that looked at all 3 of these components could help with and could make a very significant difference in.
If I could go to Mr. Daly, you talked a little bit about the HUD code that was enacted in 1974, last amended 15 years ago. It would seem that addressing these rules, which apply to all manufactured homes nationwide, would go a long way towards improving the affordability of manufactured homes. Which specific aspects of the HUD code are most harmful to your business as well as consumers?
Well, I think, excuse me, I think the first aspect is that we really need to get HUD to cooperatively work with our consensus committee before they issue governance, because every time they issue governance and we really haven't had full discussion or conversation with them, it usually adversely impacts the cost of our homes. And in our business, every $100 makes a significant difference. I think that the next opportunity is to really work on the HUD code and modernize it, and that itself will allow us to change the way the elevations of our homes appear, if we can take them off the chassis ultimately. and will also help the perception of the homes.
Mr. McDonald, you list in your testimony some federal agencies that have besieged the home building industry, namely the Occupational Safety and Health Administration, the EPA, FEMA, and the Department of Labor. You also specifically mentioned the Waters of the U.S. rule as an especially damaging regulation that could increase housing costs. Can you explain your concerns about the impact of the Waters of the U.S. on home builders and your customers?
Surely. The way the Waters of the U.S. is described is it takes every mud puddle, creek, the soil out in front of your driveway and makes it a tributary to the waters of the United States, which would require you, every time you developed a lot or a single-family house, you'll have to get a LOMAR, review, engineering review by the Corps of Engineers to build on every single individual lot. It'd be simply devastating in both time and money.
Yield back, Mr. Chairman.
Mr. Holland, would you like to answer that?
If I could speak to that, we have one project that's a great example of that, where in Hillsboro, Oregon, we had water flowing out of a culvert and into a culvert across a 2-acre parcel. And the Corps took the position that it was a navigable waterway. And that entire 2.5-acre parcel became unbuildable because of that. And we would have put 250 apartments on that parcel had that regulation coming out of a culvert and into a culvert, not if they hadn't taken the position that those were waters of the USA and that was a navigable waterway. And it only had water in it during the 3 or 4 wettest months of the winter.
Could you not have enclosed that area?
Excuse me, sir?
Could you have enclosed the area, go from culvert to culvert, and put a pipe in there that covered that entire area?
Then we'd have been locked up. Because we would have been building in, or we would have unauthorized deal of wetlands and devastating work in the waters of the USA. I'd be wearing stripes. I don't look good in stripes.
I thought maybe you could work with the EPA, but apparently you couldn't, huh?
The application process takes 1.5 years.
Okay. Thank you. Gentleman yields back. Gentleman from Kentucky, Mr. Barr, recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Holland, I'll start with you, and appreciated your testimony about Section 8 reform, and I'm particularly interested in how we can more effectively deliver Section 8 vouchers in a more cost-effective way based on the existing allocations that we have. And you talked about 3-way leases and repetitive unit inspections, resident eligibility certification, and other regulatory paperwork. Can you amplify with specificity on the reforms that you would suggest to us on how to stretch those Section 8 dollars so that we don't have the waiting list that we have?
Yeah, absolutely. I mean, one clearly is streamlining the process, but another key aspect is confidence in the process. You know, from a private sector standpoint, if you're going to count on a revenue stream, you need to know it's funded. And notwithstanding the financial challenges that happened in 2008 to 2012, but sequestration, whether they were going to be extended or not extended, all of that uncertainty for owners who have to rely on making their payment on the first is really challenging. And so one is confidence that the program that you're going to sign up for is going to be there so that you can allow those units to be rented. Because if you don't have that confidence and that revenue stream gets interrupted, you'll lose your property.
And I think that goes without saying, but I'm particularly interested in the regulatory issues. So what are the, because we all know that the reliability and certainty is an impediment, but what about for example, the streamlining of the inspection process, the paperwork, the 3-way lease?
Well, yeah, one, we support all of that. But for instance, one is if you've had a HUD inspection over the last 24 months, we think that you should allow somebody to move in right away without having to wait and re-inspect every unit every time, et cetera. And so very thoughtful, business-like approach to, if it's been inspected, if there's a record of compliance, et cetera, allowing those to move forward without having very significant delays in those processes, which just reduces the income for everybody in the process.
Well, again, we do have limited resources, so that makes sense. And let me move now to Mr. Daly. I'm a proud co-sponsor and supporter of HR 650, and I think it makes a lot of sense particularly for my constituents in rural Kentucky, and access to credit for an excellent affordable housing option for them, manufactured housing. Can you describe for those colleagues of mine who couldn't bring themselves to support this effort, explain to them and on the record why it's inappropriate to classify manufactured housing small loans as high cost under HOPA?
Well, the fact of the matter is that a lot of the people that want to buy a manufactured house, number one, they live in a rural area. Number two, their incomes are modest. Their incomes can fluctuate based on what they do for a living. They work in agriculture, they work in a plant. So it's very difficult for them to check all the boxes to get a loan.
So when the Bureau says that your industry is predatory, what's your response?
I would say we're not predatory at all. I mean, basically what we're trying to do is match people up with houses that make sense for them, that they can afford.
Yeah, and one of the things I've said is that they're going to protect people right out of their homes. I mean, this is an affordable housing option, and as you noted, the decline in manufactured home loan origination is evident as a result of these one-size-fits-all regulations. So I think that the mission of consumer protection is being turned around on its head here.
Well, I think there's an opportunity to be more flexible and for us to follow the rules with some more flexibility, and I think that the consumer will ultimately benefit if we can do that.
And if manufactured housing sellers are deemed loan originators, even though they're not receiving any compensation for the sale, other than just for selling the home and not for financing the loan, explain the appropriateness of that.
Well, the concern that we have with regards to origination is that the industry is committed to following the law, number one. And by being committed to follow the law, it's most appropriate that we really understand what our customers need in terms of size of house and what they can afford. And the way that the law reads today, we basically can show them the home, and then what we have to do is give them a list of possible lenders. And they're not experienced home buyers. So what happens is we lose customers, they become disenfranchised. The process is just too difficult for them. We believe that we can follow the law, that will not be steering, and it's up to the government to regulate to make sure that people aren't steering.
And these are fixed rate, fully amortized, no balloons. These are pretty standard
Yeah, these
loans.
are typically chattel loans, right?
Right, exactly. Well, I encourage you to stick with it, and hopefully our friends in the Senate are listening to your testimony. I yield back.
Thank you.
Gentleman's time has expired. With that, we go to round two. And the ranking member, Mr. Cleaver, has some additional questions. Recognize for 5 minutes.
Thank you. Mr. Barr, the Senate does not listen to anybody. I move that we close the Senate. Professor Dickerson, one of the concerns, this is somewhat personal, with children, young adults, 24 to 35, are not buying homes at the same level they did when I was in that same age bracket. Actually, I owned a home when I was 26, and I know there's a lot of factors in probably the student loan payments and so forth. I'm interested in any other factors that you believe are inhibiting the purchase of homes by the millennials. And the second part of it, maybe for everyone, is what can we do to remedy this?
Well, another thing that inhibits it are stagnant wages. I don't know that there's necessarily any regulation that you all have in place or could pass that would deal with the issue of stagnant wages. But this has been a problem that's been going on for 30 years, where the income for whether you want to say top 1% or top 5% has been going up, and income for pretty much everybody else has remained stagnant or has declined. The other thing that's happened with millennials is they're not forming households at the same rate that boomers did. they're delaying marriage, they're delaying having children, and the primary trigger for a young couple to decide they want to become a homeowner is, well, first they move out of their parents' basement, they marry, they have children, and then they want to buy a home. In many instances, it's because of the schooling issue.
How do you get them out of the basement? Oh, I'm sorry, I won't go there. But, you know, that is troublesome. You know, I mean, there probably is one legislative thing we could probably do, drop the interest rates. I think it's almost a sin that we are making money, the federal government's making money off of our college students after graduation. The rental housing that is being created, or much of it, is luxury units. And I'm assuming that there's some kind of trickle-down theory that we take care of the luxury apartments, then eventually we'll take care of the low to moderate income. Mr. Daly, you have any?
Specifically on rental?
Yes.
You know, there is some rental activity that takes place in manufactured housing communities today, and you know, it's just perking along. There have been some increases that I think seniors feel some pressure on, but generally speaking, I think it's operating quite well.
Well, is it easier to do low to moderate income or luxury?
Oh, for us, well, as an industry, we typically do not build rental properties, luxury rental properties. We're primarily single-family home
Mr.
products.
Young?
My company typically builds workforce housing in smaller communities. We utilize the low-income housing tax credit program for a good amount of that, and then we also build conventional apartments, but we just do a very good job of trying to keep our costs in line so that we can function in those markets. But I will tell you, it's increasingly hard to do, and many of the problems that we encounter are the problems with Fannie and Freddie's being basically out of the business, being slow to be able to react. So we end up having to go to getting HUD-insured mortgages under the Section 221D4 program and try to work through that. Then we encounter other issues with HUD that layer on more expenses on top of that. So it's kind of a catch-22. We keep running into it. We think we get one place fixed and then another one pops up. It's like whack-a-mole. It's just you can't quite get your arms around all of it at the same time. But I think there's probably a trend to do more workforce-type housing than luxury housing. I'm seeing that in the marketplaces now, not happening in the big cities. I'm talking about in the smaller communities, the mid-sized cities, and the smaller cities.
Ms. Bean?
Can I weigh in on that? I mean, we see actually a lot of the opposite. We see the trickle up, that homes are built for really workforce, middle-income folks, and then because the demand for housing, especially in urban areas, is so great, we see that housing actually being rented by wealthier renters rather than the renters that it was intended for. So, and the trickle-down theory, at least in New York City, really hasn't panned out because the homes that are built on the luxury market have all kinds of restrictions in terms of how much income you have to have in order even to rent that apartment, that it becomes very difficult for it to sift down in any way except over decades.
Yeah, my time is out. My assumption was just that if we're leaving low-income tax credits, if we're leaving money on the table, if builders are leaving money on the table instead of going through low-income tax credits, the assumption is that they would automatically try to, they're moving toward luxury. Are you back, Mr. Chairman?
Gentleman yields back. Back to Mr. Barr from Kentucky. Recognized for 5 minutes.
Thank you, Mr. Chairman. And back to Mr. Holland really quickly. You spent a good bit of time in your testimony talking about not in my backyard, the NIMBY issue, and local zoning and land use laws. And Mr. Rothfuss was touching on this a little bit, but if you could expand on what federal role there is if any, to encourage reforms to local zoning laws that would help facilitate the construction or rehab of affordable housing?
Well, let me just touch on the NIMBY question, which is, if you, in the West Coast cities, for instance, let me just take a step back. We have 10 gateway cities in the United States, where particularly in the areas, Austin, Texas would be one, Portland, Oregon, South Lake Union and Seattle, where you have very significant increases in technology-related jobs. And what's happening is the kickback to building more density is that people are using the zoning land use deal to tie up sites from 5 to 10 years. We're building one site in downtown Los Angeles where it took 5 years to get the zoning. They were sued because it was too dense. That took 2 years to resolve. Then they were sued because it wasn't dense enough. That took another 2 years to resolve. And the gentleman who was a 30-year land developer said, I'm done. And we're finished. We just got that project finished. So from a federal standpoint, this is a picture of I-73, and the question is, will 23 lanes be enough? Now, if you took a small fraction of those transportation dollars and you said, we're going to build a light rail, or we're going to build transit hubs, or we're going to provide access to the urban core, but it came with a requirement that said, if you're going to take these transportation dollars, you need to be able to have as-of-right zoning so you can put residential density around the transportation nodes and in the urban core. That triangle between infrastructure, transportation, and housing has to be all three. And many cities want to do the right thing, but the local politicians are concerned about, getting kickback from their constituents. But in order to get transportation dollars, if you had to have as-of-right zoning around 5% of the land, the urban core and around the transit corridor, we could build significant amounts of housing that would then provide an adequate supply, so you're not creating economic dislocation. Because in those job centers, in those gateway cities, those new jobs pay $100,000 or thereabouts, very top, and they economically dislocate everybody else within that sphere, and that ripple down happens because we're not building the density of housing and a quantity of housing in those key submarkets.
Thank you. And Mr. McDonald, didn't get a chance to talk to you, but always enjoy talking to Bob Weiss in Kentucky and the Home Builders Association of Kentucky. And in Lexington, the largest city in my district, Todd Johnson, they do a great job representing our home builders. They talk about that labor shortage a lot. And in fact, the Home Builders Association of Lexington had to start their own privately funded building institute for workforce development. And so we know that that's a big issue. So one, amplify that testimony a little bit, and is there anything that Congress can do to help there? And secondly, talk a little bit more about Davis-Bacon and the and also Waters of the United States and any other regulations and the added cost to the home purchaser as a result of those regulations.
Yes, we have a huge problem with labor right now. In Texas, for example, the average age of an electrician is 61 years old. The average age of a plumber is 59 years old. Framing carpenter is 57 years old. So what we're doing is we're aging out. We're aging out of all the trades. We've made a mistake in the country in that we've somehow told everybody that you're a failure if you don't go to college. You're a failure if you don't end up with large student debt.
And these can be really good jobs. These well-paying jobs. Because the demand is there.
And we're talking about $50, $60 an hour jobs. We're not talking about jobs and that's not what happened. And that's not accounting for the guy who may start his own company and even do better than that. I mean, we're talking about someone who just works the trades, and that's an extreme issue in the country that we need to figure out how to overcome. The Home Builders Institute, we are the largest trainer of people in trades. We work in prisons, everywhere else, trying to get people to understand better about the trades issue. Back over to Davis-Bacon for just a second. The problems with Davis-Bacon, for example, are like the new electronic reporting program that Davis-Bacon uses. It's new and it's very difficult. I have a subcontractor who's been working with me. He's a stonemason, Jose Guerrero from Lytle, Texas, been with me for 12 years, did the masonry work on my personal residence, does all of our projects all over the state of Texas. He travels great lengths sometimes to get to these projects. It's him, his brothers, and some of their sons. They do beautiful work. They're craftsmen in the first order. I'm building a project 30 miles away from his home in Seguin, Texas, and I can't use him because we're doing a D4, Davis-Bacon property there. And Jose's a wonderful guy, but he doesn't understand computers well enough to get online and follow the Davis-Bacon reporting systems required by HUD. And so he's been pushed out of the market. It's a gigantic unintended consequence for a minority contractor to lose business.
And my time has expired, but lead paint is also something that I hear about from my remodelers.
Yes, sir.
Yield back. Thanks for your indulgence, Chairman.
Great questions. Gentleman yields back. Let me just wrap up with a couple questions for everybody. One of the questions I started out with a while ago was, what is the most burdensome rule or regulation? Our hearing today is future of housing, government regulations, and the high cost of housing. So can each one of you give me the one rule or regulation that is most burdensome to you that you think could help alleviate or help improve or streamline or whatever it may be, housing in general? Professor Dickerson, you want to, we're busy on the other end over here, but that may not be your area of expertise, but I'm sure you've got a lot of background in that as well.
Well, I guess I would, and it's not a federal
Yes, federal,
regulation,
yes.
but it does relate to the zoning issue. And I'll respond to your question by mentioning that in 1926, the Supreme Court said that it's okay to segregate single-family housing and apartments and keep them completely apart. In that opinion, and I think the opinion now controls a lot of both state and local zoning theories, apartments and renters were referred to as parasites. And I think that as a country, we have to get to the point that we recognize that if we're going to resolve the affordable housing crisis, it's going to be a mixture of high-end, mid-end housing for the poor, and that we have to be willing to accept that in some instances, people aren't going to be happy that certain types of affordable housing may be in their areas.
I think it's important. I asked a question, I think, of Ms. Bean a while ago when I was talking also, but I know that I viewed the Hurricane Katrina rebuild, and a lot of their rebuilding is done in a mixed use. I mean, you have a lot of folks who are renting who are able to pay it. You have commercial uses in the building. You have subsidized renters. So by using that sort of a model, it enables builders to do a better job of building, and you can actually build communities around that versus just apartment after apartment after apartment. And it seems like it works better. I don't know what your thought process is. You see in a little bit different spectrum, perhaps, what's going on.
And it not only works better, but it's sort of consistent with the point that I've been making, that we have to think outside the box. So simply because it's not a form of affordable housing that we've always used, simply because it may require us to think differently about what do millennials want for housing, what do we need for working families, what do we need for people that live in a rural community. One example that I'll use is the city of Memphis, and I'm only familiar with it. A, I'm from Memphis, and B, I was there last week for a conference on urban blight. Most of the affordable housing units that have been created in the city of Memphis have been mixed use and mixed income. And so I think that that is a great way for a lot of cities to sort of deal with the issue of affordable housing and also to respond to some of the needs of millennials who want to have everything around them. They don't want to have to get in the car to drive to get everything.
Very good. Mr. McDonald, would you like to answer the question I originally posed here? We kind of got off track,
Certainly.
but I appreciate Professor Dickerson. What is the one rule that, whatever through the spectrum, that could help you be able to better provide housing for especially low and middle income folks?
The problem is it's a bundle of sticks. It's a straw that broke the camel's back.
Okay.
And it's just one on top of another, on top of another, on top of another. And yes, we could go and we could pull off one. We could say we can fix the waters of the U.S. issue. We could fix the 100-year floodplain issue with HUD. You know, I could go through the crystal silicon sand issue with the EPA. All of those are wonderful things for us to be able to unload. But if you take one and all the rest of them stay, you haven't fixed the problem, sir. We have got to address all of them. I would love to be able to give you a silver bullet and say, get that one. And I can't do it because it is the whole bundle of sticks.
Well, what we're looking at doing is trying to find that bundle of sticks. You know, we did H.R. 3700, which was a good step, and I think it addressed, somebody had a question a while ago. I think Mr. Holland, you made a comment. We actually fixed your problem with regards to dwelling inspections. Yeah, that's what it was. And we actually fixed that problem in 3700. So we're listening, and that's why we're having the hearings again today. Ms. Bean.
So I really appreciate what you did in 3700, which is a huge step forward for those of us in cities. But I would say that, again, one of the major barriers that we have to providing affordable housing is the rigidity of the tax credit rules. Having income averaging, which would allow us, it would reduce costs because we go through a lot of tenants to find the ones in the haystack that exactly fit the income level. We limit the ability of the city to use the tax credit program for preservation because you've got existing tenants, and if one of them is at 65% of AMI, then you've got problems in using the tax credit for preservation. So that alone could make a huge difference in the way in which we could leverage the tax credit program to really provide exactly the mixed income housing that we want. We don't want everything at 50 to 60. We want that range because it's better for the neighborhoods, it's better for the families. So having that flexibility would make a huge difference.
Great suggestion. Thank you very much. Mr. Daly.
I mentioned to Representative Barr about Dodd-Frank, HOPA, and the origination. Those are two of the primary obstacles we have today, but I think the bigger obstacle is secondary funding, so that more people can enter the market, because we are the form of housing that is not subsidized. And so we are truly trying to serve working Americans who need a new home. And if we had the availability of more funds, I think we could do a much better job. And the other fact is that we primarily serve rural markets. And when you go through rural America today, you see the state of housing, and it's deteriorated significantly. And I happen to go across the country on a regular basis on rural roads, and so it's real, and those people deserve better.
Well, as somebody who, when I left home and went off to college, my first housing rental thing was a mobile home. Then after I got out of school, my first home was a mobile home. And once I got married, my first home was a mobile home. And my wife decided we need to go someplace else to do something else. So we moved again. But had some interesting experiences with it. But thank you. Mr. Holland.
Yes, sir. Thank you.
How would you address that question?
Yes, sir. Thank you very much. I would address that much like Mr. McDonald did. We look at Davis-Bacon wages. In wood frame construction, they add about 25% of the cost of the buildable costs from that standpoint. You look at some of the new energy regulations, and the energy regulations don't have a payback for 30 years. I mean, it's hard to say you shouldn't have an energy-efficient house, but if it's a 30-year payback and it raises the effective cost to the consumer, is it really something that is going to add to from that standpoint? The question of waters of the USA, et cetera, all of those, the regulations under Dodd-Frank for apartments, we weren't part of the problem. And so you didn't have the losses at Freddie and Fannie in the apartment sector, but because of the regulations of Dodd-Frank and the requirements and the risk-based capital, it's significantly increasing the cost of our construction loans, and also Freddie and Fannie spreads are increasing because of Dodd-Frank and Basel III from that standpoint. The one thing I would throw out to you is in the western U.S., particularly in California, the discrimination of many cities against apartments is one of the things that's significantly increasing the cost. Cities want office buildings because they have the jobs and they get the property taxes. They want retail because they collect the sales tax. But they play a game of beggar thy neighbor, where we don't want those people living in our town. And it's really a problem because you have to add the transportation, and getting approvals in those cities to be able to build apartments and to be able to allow the workforce that's working in that town to be able to live in that town at all. Just getting permission to build would be a dramatic improvement. And so one of the things we'd love to see is some type of guidelines where cities, needed to have as of right zoning or zoning availability for their workforce. So this game of pushing the apartments in some other place wouldn't be able to do that.
So are you advocating, say, would a mixed-use
Absolutely.
structure work there? I mean, you're looking to try and appease the city fathers, so you come in and say, we'll build a mixed-use building where we have some apartments as well as commercial stuff in there, and
If you would allow, if we were to have a regime where we could build mixed use around transit, because then families with limited means wouldn't need a second car. That would save them on average $9,000 a year to be able to use public transportation. We'd produce the housing. We'd allow them to use effective use of the infrastructure, the transit. And, the only reason most people need a second car is so that the second spouse can get to work. So if you can have the density around the transit or in the urban core, it's going to significantly improve the choices and the cost from a development standpoint.
very good. Well, I think we've exhausted all of the questions that we have for you, and certainly appreciate everything that you guys have presented to us today. You've been fantastic witnesses. Certainly appreciate your patience with us. And
Mr. Chairman?
you another one?
No, I'd like to enter into the record this document entitled Enterprise Community Partner Statement for the Future of Housing in America.
Without objection. Anything else? So without objection, all members will have 5 legislative days within which to submit additional written questions to the witnesses, which we will forward to you, and hope that you will get the response back as quickly as possible. Without objection, all members have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And with that, this hearing is adjourned.
Very nice to meet you.
Oh, nice to see you.